Welcome to the What's Happening Birmingham video podcast.
What lies inside all of us is more than data, it's life. What's flowing through America's veins is its diversity. And it's those very differences that will lead to answers for generations to come.
Hello everyone, this is Jarvis Escott with What's Happening in Birmingham. Today I have the honor and pleasure, one of my good friends, Mr. Desmond Reed.
Yes, sir.
Sir, welcome to the podcast today.
Glad to be here, sir. Thank you for having me.
Great. I want to call this finna do a wonderful fireside chat, I like to call it.
All right.
Talking about the mortgage process in 2023.
Okay.
So a lot of you all probably thinking about buying a home, even though we're in this interesting market. I'm not gonna call it crazy housing market, but interesting market. So I want to bring Desmond on today. He is with American Financial Network, and he's a mortgage loan officer for. First off, I want to say congratulations.
Well, thank you, sir.
On your new business venture.
Yes, sir. I am new to the mortgage business. Not new to real estate at all. I'm actually the broker that I actually work with, Mr. Michael Ali. He actually funded. He was a loan officer on several other real estate projects that I had. So now I've teamed up and working with him and Mr. Clyde Bell and Mr. Estelin Harrison, and that's our team, Dream Home Team, and we're a branch of American Financial Network.
Okay, great. So let me first give you all a little forewarning that this interview might be a little long, but I'm going to chop it up. I'm going to do a little Vlad TV style interview, mate, because I want to make sure that you all, some of you all may have short attention spans and may not want to listen to a 30, 40 minute video. It's very educational what we're about to talk about, but I'm going to break it down different, and also helps me on the YouTube videos as well. But let's first start off, how do you qualify for a loan, for a mortgage?
Well, it's pretty simple. It's just like anything else. You would let us take a look at your credit, your income, also the house that you're actually purchasing. So the bank looks at all of that stuff, and then you got different kind of loan programs, like you've heard of FHA or VA or USDA. You look at the best one that works for that particular customer and that particular property. And that's kind of how you qualify for a loan. Just say, for example, if you got somebody that's looking at $1 million house, but they make $30,000 a year, okay? So they might not qualify for that house just based on what their income is, if you follow where I'm going with that.
Okay.
So part of the qualifications is going to be the credit, it's going to be your income. That's why it's very important to get what we call pre-approved. That's when you come in. We get all your information. We take a look at it, and then we say, hey, you're good up to this particular amount. This is your interest rate. This is what would be the terms on the deal. And then at that point, you'd go out with your realtor, find a house based on those parameters, and then we go from there.
So I think one of my questions is, I heard pre-approved, pre-qualified. What does that mean?
Pre-qualified and pre-approved, they're kind of similar. Pre-approved actually means that you actually have a paper in your hand saying, hey, the bank is taking a look at my credit, they've taken a look at my income, they verified how much money I made, and I got this letter here saying that I'm qualified for a house up to $400,000, and these are the terms of the deal. Pre-qualified is you may have some of that, but it has not been all vetted yet. It's not been all approved yet. So that's just a little difference in it.
Okay, and I mean, and of course, I always with podcasts, I'm always thinking what some people are thinking. Let's back up for a minute. What are some things I probably need to do 6 to 12 months before I even come see you?
Well, I would think you would want to take a look at your credit report.
Okay.
You can go to annualcreditreport.com. You can get all three credit bureaus. You can take a look. You can take a look at them. And basically, what you're looking for is inaccuracies.
Okay.
Stuff that may not even be your account, but it may actually be on your credit or whatever. You want to know that. You don't want to have any surprises. Or it may be something that was yours and you paid off or whatever, and it's not showing that it's paid off. Or it might be showing that, hey, Jarvis has late payments, and you like, what you talking about? I ain't never pay y'all late. And when you jump out there ahead, it just gives you an opportunity to find that kind of stuff and get it taken care of. So once you're ready to buy a house, nothing slows down that process.
So should I go buy the furniture?
No.
Okay.
No.
So I go get that new car?
No. We don't.
Even if I do get pre-approved after.
No, definitely not.
Okay.
We don't want to do anything that's going to drive what we call your debt to income up.
Okay.
Before you purchase your home, because once you buy that new car, once you buy that furniture, that raises your debt level up, and that's not something that we would want to. That's not something that we would want to do.
Okay, so let's go back to the other golden question I got on here. It's like, I mean, you may answer it some ways. How much home can you afford?
Basically, it's the same as that. How much home can you afford is going to be strictly dictated by your credit, your debt to income. That's going to tell the banks are going to take a look at that, and they're going to come up with a number, and they're going to say, well, hey, Jarvis can afford a payment of this amount of money, and that's going to equals this amount of house, and that's the bank is basically going to answer that question for you.
Okay, and another thing too, which is also a golden question: how much should I save for the down payment? Or do you still have days where I know this probably was pre-financial crisis, where pretty much people's getting at home just writing the name?
I always tell my clients 3 to 5%.
Okay,
it's kind of what you want. What you want to go into it expecting to put down. However, there are some programs out there that have down payment assistance. Okay, so that's gonna vary. Those programs kind of come and go, and may stipulate things like what county that you live in and stuff like that. So all of that is going to be a variable of it. But I would typically say 3 to 5% just to make sure that you're good.
Okay, so say you're watching this podcast and you're saying, Desmond, this making love information, what you're saying, but as far as my employment, I'm self-employed. What do you do then?
Self-employed is all good, but
Okay.
we got programs for self-employed.
Okay.
You know, self-employed is not a problem.
Okay. So moving on, you broke down, and I would tell you this because there's so many different type of mortgage loan programs. You just pretty much need to call him and break it down. But most traditional 30-year mortgage, rate breakdown. How does the interest rates affect the mortgage?
Well, interest rate affects your mortgage is very simple, just like it affects everything else. If you're buying a car, you're buying a furniture or whatever, higher the interest rate, higher the payment is going to be. Lower interest rate, the lower the payment is going to be. Now, one good thing about a mortgage is you've heard the term refinance. Okay, so let's just say you get a house, and let's just say your rate is 8%. Okay, and then 2 years from now, things are a little bit better, and you look up and rates are 3% or 4%, whatever. You know what I'm saying? Now you can go back, stay in that same house, refinance your loan, and take advantage of the new lower rate.
Okay. So now I'm in the house. I get that first mortgage payment. What does that mortgage payment include? Someone break that.
It's going to include the cost of the house, taxes for the house, any what we call like escrow that may be involved, like your homeowner's insurance is one. So anything that's rolled up into your mortgage loan, everything is going to be calculated out in that payment.
Okay, another thing I want to go back to, I don't want to make sure I missed this. Okay, after I get pre-approved by you, I find the house. What are some other things in that, while we get into like the closing process that you want to give me a heads up on or whatever?
Well, pretty much you actually covered it when you was asking kind of like what not to do.
Okay.
Whatever. From that point that you get your pre-approval letter and you get with your realtor and you start looking at houses, it's just like what we said, man. You just really don't want to do anything to jeopardize or change that pre-approval that we got. So you wouldn't want to go out and buy that new car. You wouldn't want to go buy furniture. That kind of stuff that's going to show up on your credit report. You wouldn't want to go open up a new credit card, stuff like that or whatever. You just don't want to stay clear of until we actually close on the loan. Now, one good thing as well is we're actually closing pretty quickly. Usually about 20, 21 days is how long it's taking to close. So it's not taking a long time to get to the closing table.
Well, another thing I'm hearing too is that, like you said, with this market, houses are going, well, I'm not going to say with this market, but let's say like last year this time, when the houses was going, people buying houses like crazy, and you got a whole lot of bids. Have you ever had a situation of hear other, the people in your field be like, well, they made a bid, but like you said, the bank said you can only afford $400,000. If this person bid $450,000, you may have to walk away from that deal.
Right, unless you're gonna pay the difference in like a down payment or whatever, then yeah, you would have to walk away from it.
Okay, so what happens at closing when I come in?
Basically, closing is where everything comes together.
Okay.
So you sit down with the closing attorney, and they go over everything in your mortgage contract.
Okay.
Your pay, how much you're buying the house for, your interest rate, how many payments you got to make, your escrow account, just everything there is. All the I's get dotted, all the T's gets crossed, and everything becomes legal at that point.
Okay.
And then at the end, of course, you get the keys to that.
So I hear this, I'm gonna call it an age-old argument, but always the interesting discussion: renting versus buying a home. Okay. In your professional opinion, why is buying a home better than rent?
Well, buying a home is because you actually own it, and historically, your home values always are going to go up. Okay, so as they go up, you're going to build what we call equity. Okay, so over the years of you paying down your loan, your equity is in the house is usually still going up. Okay, so at the end, if you want to take out all this cash, your equity out in cash, you're able to do that. If you want to start a business and use the equity in your house, you could do that. And those same benefits you just don't get when you're renting. When you're renting, just say your payment is whatever, $1,500 a month. You're gonna pay $1,500 a month. You're gonna live there. And then at some point, you're gonna hand them the keys, and y'all gonna walk away, and that's it. So you don't get the perks of owning a house when you're renting.
So, and another thing I want many people that's watching as well. Say people say, "Well, I couldn't find the dream home I want. I want to build it from the ground up." Does your company offer those type of?
Absolutely.
Okay.
Yes, sir.
So, what are some another thing we'll go back to, always I say your professional opinion. What are some misconceptions people have about the mortgage process?
I think one is that your credit has to be perfect to get a home. It doesn't. You know what I mean? We do loans all day, every day, with credit that's just not perfect, and that's okay. We actually got some programs that got no minimum credit score.
So let's just say a person had bankruptcy. Last 2 years, can they possibly?
Absolutely.
Oh wow. Repossession.
Absolutely. Yes, sir.
Oh wow. Sounds like almost like a car salesman. So you can't get a car.
Absolutely.
So how can people, if they want to reach you, what's the best way?
You can give me a call at 205-240-1804. And that's 205-240-1804 is the absolute best way to reach me.
Okay, Desmond, thank you for coming on down. I'm going to bring Desmond on for a couple more segments that we're actually going to get very in-depth.
Okay.
Maybe
Let's
break
do it.
down some of these, basic
Different
form.
programs. No
Yeah,
problem.
but I definitely want to talk about the adjustable rate mortgage. That is an interesting
Okay.
mortgage, I would like to say, because that versus the 30-year.
Okay.
But Desmond, thank you for coming on today. Thank you all for watching. Please give him a call if you're thinking about buying a home. I know today is 2023, but who knows? Well,
We're still doing business.
We're still doing business. So, like I always tell people, YouTube is forever. So give him a call. Thank you all for watching. Please check out what'shappeningBirmingham.com for more interviews. Don't forget to subscribe to the YouTube channel and check out the audio version of this on Apple Podcasts. Thank you all again. Thank you all again, and have a great day. Bye-bye.
Thank you for watching the What's Happening Birmingham video podcast. Please check out our website, app, or subscribe to our YouTube channel for the latest videos today.